take a little bit of a different turn right now. You know, Chinese shares have been soaring the last few years. Take a look at how they performed over the past 12 months. You can see that the CSI 300 index is up almost about actually up by about 170% over the last 12 months. Now, our next guest says it's only the beginning, and he's written a book about investing there titled A Bull in China. He's none other than Jim Rogers, chairman of Rogers Holdings, joining us right now on set. Hi, great to have you back, Jim.
I'm delighted to be here, Betty.
And I definitely want to talk about your book and investing in China. But before I get to that, though, I want to get your reaction to just that interview
Betty,
with Alfonso Jackson.
I have learned over the years, don't get your investment advice from the U.S. government. You're going to go broke if you believe those guys. I'm sure Mr. Jackson's a very nice person. But the idea that this is going to save housing and financiers, that's gobbledygook.
Is this the closest, do you think, that we'll even get to a bailout by the government?
Who are we bailing out? It's not going to bail out Fannie Mae. It's not going to bail out the lenders. It's going to make things worse for them. Who's he bailing out? Maybe he's bailing out a few homeowners, and we don't want anybody to lose their homes, but that's not going to solve our problems, and it's certainly going to make things worse for the financial institutions.
Well, absolutely. I mean, you may see more bankruptcies among the mortgage lenders.
I'm sure you will.
Are you still short Freddie Mac, Fannie Mae?
I'm short Fannie Mae. I'm short the home builders. I'm short Citibank. I'm short the investment banks, yes.
All right.
Full disclosure, yes.
All right. Also, Jim, you know, obviously you've been a big critic of Ben Bernanke on this show as well as elsewhere. We've got the Fed meeting coming up on December 11th. Obviously, your position is going to be that they should not be cutting rates. But I want to ask you, you know, what do you think Bernanke should be doing, or the Fed should be doing in this environment?
As I said to you once before, Bernanke should abolish the Federal Reserve and resign. Those guys are making things so much worse for us.
Come on.
Much. No, I'm not kidding. We've been many times without a central bank. But let me tell you, last week or 2 weeks ago, he was on before Congress saying, if the American dollar goes down, it doesn't affect Americans who only buy American products. I was terrified, Betty. This is a man, we know he doesn't know about markets. We know he doesn't know about foreign exchange. Now we know he doesn't even know economics. To say something so ludicrous, I was terrified. I mean, I want to get out of all of my U.S. dollars. What should they do? They should do nothing, or they should raise interest rates.
All right. Should they be injecting more liquidity in the markets in some other way?
Absolutely not. I mean, we have a massive amount of liquidity. Everybody knows they're waving flags saying that we don't care about the U.S. dollar. We want the U.S. dollar to decline. Listen, we can live in a banana republic if that's what they want, but that's never been a sound policy. Never in history, in the long term or the medium term, has debasing your currency been a sound policy, despite what they may say. He doesn't know that, though.
But are you arguing, Jim, that we should be raising rates right now in order to combat inflation?
We should be raising rates to save the dollar and to combat inflation. Betty, we're having a recession. So what? We've had them before. Now, recessions are not good for those who get hurt, but we have safety nets. We put in lots of safety nets. Let's have our recession. Let's clean out the systems. We've had them every year, every 5 or 6 years throughout history. Recessions are good for an economy. They clean out excesses. You go down, and then you start over from a sound base. Putting Band-Aids on to try to hold this thing together is madness.
Well, do you think this is going to pan out to be a relatively short recession, like the one we had in 2001?
No, absolutely not, because the more Band-Aids they put on, the more you try to hold it up, the worse it is in the end.
All right. Jim, very quickly, though, I want to ask you about bonds. You've said before the bond markets, if you're a bond trader, get out of the industry now. We're actually having 10-year yields now below the rate of inflation. What do you think is going to happen in the long term because of that?
That's called a negative yield. I mean, if you buy bonds, you're losing money just by owning.
Negative rate of return, yeah.
Negative rate of return, yeah, negative yield because your inflation is higher than your yield. I would sell bonds. I don't know how much more. I'm short bonds. Bonds are having a rally because they expect Bernanke to flood the world with more money, and he's doing it. It's not going to last.
All right, Jim, let's talk about your book. That's what you're really here for. A Bull in China. I read it over the weekend. A great read. I think you open up the Chinese market to the average investor. Interestingly enough, in 2004, you said you almost got censored by the Beijing government because you were actually quite negative on the Chinese markets. What changed your mind since then?
Well, in 2005, the Chinese government, they were worried about the market. It went down for 4 years, despite the growth of the economy. They started changing a lot of things. There was a huge overhang of stocks. They got rid of at least they solved the problem of the overhang. They started doing things to encourage the stock market rather than discourage, and it's worked.
And you've also said before that a lot of people don't know about the China story. If they did, they would start investing. But judging from the index performances, a lot of people are in the Chinese markets.
Not foreigners. It's only Chinese who are in there. It's almost impossible for foreigners to buy shares in China, which is why shares outside of China, Chinese shares which trade outside of China, sell at a big discount. I bet you don't know, you might, but most people don't know anybody who's ever invested in China. You can buy Chinese shares in Hong Kong or New York or London or Singapore. There are places you can buy, but most people have never invested in China.
Yeah. And you've seen markets in Shanghai as well as the ADRs here correct by about 20% from their peaks. Do you think if you wanted to invest in China, would now be the good time to do it, or would you want to wait a little bit for the correction to finish out?
Betty, I am the single worst market timer in the world. I am the hopeless trader. I am no good at market timing. I've learned that a lot of times over the years. People make their own decisions. This book is designed to teach people what's happening, some areas of the economy which may or may not be good, and some ideas where they can start looking if they want to. But I do know that over the rest of this decade and the next decades, China is a place that people must invest. It would be like investing in New York in 1907. It was a spectacular thing to do, even though stocks were high. And that you should learn about investing in China in 2007.
Well, how are you investing in China? Tell us your strategy right now.
Well, I own shares in China. I own B shares, which trade in China. I own the currency, which is a great way. I own commodities, which is a wonderful way to invest in China. And I also own Chinese shares which trade outside of China, such as in Hong Kong or Singapore, because those shares trade at big discounts to the shares in China itself. Same company, same shares, with their big discounts.
Now, I know you've said before that you don't want a bunch of blind followers, but do tell us, though, what industries in particular you think are pretty hot right now, or where do you think you'd want to put your money in China specifically?
Whatever I say, Betty's going to be wrong. I promise you. I told you I'm a terrible market timer, but things like agriculture in China have a spectacular future. Tourism in China has a spectacular future. Infrastructure, power generation, water treatment. China has a horrible pollution, just pollution everywhere. Anybody who's going to solve their pollution and water problems is going to make a lot of money. You have to pick the right stocks. Otherwise, you're going to get it wrong. But those industries, and we talk about some of those industries, are going to have magnificent futures.
Now, you've also said before in this book that if you're an average investor, you don't know a lot of these Chinese companies. I mean, they may be familiar names to us because we've been watching China for so long. But if you're an average investor, how do you even begin to make sense of all the companies that are listed, what they do, who owns what? Because transparency is a big issue in China.
You buy this book. You buy it and read it. Read it twice. Buy it twice. No, you got to do your homework. I'm sorry. The same thing is true of America. When we were investing in America in pharmaceuticals or technology, most of us didn't know anything about it, but we started learning about it, and so that's how we made investments and we learned. Or you can buy the index. There are indexes in China now that you can invest in. There are even mutual funds. I don't invest in mutual funds myself, but there are lots of ways to invest in China. But no matter what you do, Betty, you've got to do your homework. Please, I just cannot bear for somebody to buy my book and then invest in China without knowing what he's doing or she's doing.
Blindly going into it, of course. I mean, that applies for everything, not just China.
Yes, everything. It doesn't matter what it is. New York Stock Exchange, whatever it is.
Now, what's the biggest risk to investing in China? Is it actually the government itself?
Well, who cares if the government's overthrown? We've had plenty of overthrown governments throughout history. That's not going to change the situation. Probably make the situation might.
Well, no, the government meaning their involvement in corporations.
Well, the government in China certainly is doing a smart thing. They're trying to cool things off in China. They're trying to cool down the economy. They're trying to cool off the stock market, the real estate market. I hope they do. That will give people who read this book a chance to buy at lower prices, maybe in the summer, if they do cool it off. That's a risk, but it's not a great risk. The Chinese government has been very, very good at developing the economy over the past 30 years.
Right.
And they are wisely, in my view, trying to cool things off now. But that's not a risk. Cooling China off right now would be very bullish for China and for the stock market down the road. I hope they cool it off.
And also, Jim, very quickly, we've only got about 20 seconds or so, but what kind of an impact will a U.S. recession have on China? Or is it going to be less so now than 10 years ago?
Much less than 10 years. It'll only affect the people who deal with America. Tourism, agriculture, some of those people aren't going to know there's a recession in America, nor will they care.
All right, more protected there. Okay, thank you very much, Jim. Always great to have you with us.
Thank you.
That was Jim Rogers, chairman of Rogers Holdings, and his new book is A Bull